Good morning. Welcome to Market Monday for December 11th, 2023. Today we're going to take a slight detour from our regularly scheduled programming to introduce you to a topic that you've surely heard about, and one of the most polarizing topics in finance today. You guessed it, that topic is Bitcoin. Before you shut off the video, we strongly encourage you to stick around. Please know that this is not an endorsement for or against Bitcoin or digital assets, or cryptocurrencies as they're sometimes called. As our viewers know, we always seek to dampen the volume on the hype, the media, the narrative, cut out the noise, and try to extract useful information with a sober approach. That's exactly what we're going to do here today. Ultimately, whether you choose to allocate a portion of your investment portfolio to digital assets will be a long, deep, ongoing conversation with your investment advisory team. But this topic, this technology, this asset class is evolving and making its way into the mainstream whether we discuss it or not. And we'd prefer that you get your information from us rather than various media outlets out there, whether it's TV or online. Most of their job is to generate eyeballs and clicks, not provide quality information. Without further ado, here's our brief introduction of Bitcoin. First, why now? Bitcoin was officially launched on Halloween of 2008 via a paper published on the internet called Bitcoin, a peer-to-peer electronic cash system. We're bringing it to your attention now because we believe in January of next year, you're going to be able to invest in Bitcoin through an ETF, the type of fund we most often use to get exposure to various asset classes like the S&P 500 stock market, small caps, international stocks, dividend stocks, bonds, and even gold. Despite the first Bitcoin ETF registration attempt going all the way back to 2013, it's taken until now for the United States Securities Exchange Commission to more than likely approve it. But Chad, I don't really understand what the heck it is. Fair point. Remember this?
But you know, I think about this, and what about this internet thing? Do you know anything about that?
Sure.
What the hell is that exactly?
Well, it's become a place where people are publishing information.
Right.
So everybody can have their own homepage, companies are there, the latest information. It's wild what's going on. You can send electronic mail to people. It is the big new thing.
Yeah, but you know, it's easy to criticize something you don't fully understand, which is my position here.
Go ahead.
But I can remember a couple of months ago, there was like a big breakthrough announcement that on the internet or on some computer deal, they were going to broadcast a baseball game. You could listen to a baseball game on your computer. And I just thought to myself, does radio ring a bell?
No need for the internet, just turn on the radio. Or how about this?
Oh, that's
that little
right.
mark with the A and then the ring around it.
At.
See, that's what I said. Katie said she thought it was about,
Yeah. Oh.
but I'd never heard it.
Around
I'd never
or
heard it
about.
said. I'd always
That's
seen the
right.
mark, but never heard
Yeah.
it said. And then it sounded stupid when I said it. Violence at NBC.
Folks, when new things come about, there's a certain natural tendency to dismiss it. We didn't need it before, so why do we need it now? Just like with the internet, we don't fully understand all the long-range implications of digital assets or blockchain technology, and that's okay. We don't have to, but we should at least approach these novel technologies with an open mind. Let's throw away the light switch. Bitcoin good, Bitcoin bad, and let's evaluate this thing for what it is rather than making cursory black and white judgments. And let's not fear new concepts or new technologies. It wasn't until 1918 when individuals could invest in US government bonds, called Liberty bonds, for the first time. See that? You buy Liberty bonds. Or have a look at this. This is the original documents for the very first S&P 500 index. That stock market index we talk about every single week. Probably the most widely used stock market index on the planet. Yep, didn't exist until 1976. And in the early days, wasn't quite the obvious investing choice as it is today. Who knew? Index funds are un-American. But it's not just stocks. Look at just the past 20 years of bond ETFs, funds that are now easily investable with just a few clicks, etc., etc., etc. Point is, folks, technology, financial innovation, laws, are always changing, and as investors, we don't need to chase every single novelty in the marketplace. But to remain relevant, we do need to approach major shifts with an open mind. As of now, it looks like over a dozen fund companies have filed to offer Bitcoin ETFs. Again, the saga has been going on for over 10 years now, and we think it's finally coming to fruition. A Bitcoin ETF will make owning Bitcoin much easier and safer for millions of people, which has caused folks to anticipate a lot more demand for Bitcoin, pushing the price of one Bitcoin north of $40,000. For reference, Bitcoin started the year at just over $16,000. But you didn't think Bitcoin was immune to financial media predictions and prognostications, did you? Just over a year ago, a billionaire predicts Bitcoin will crash. He must have known something. Oh, here's a bank predicting a 70% plunge. Barron's, a 50% fall. Sliding to 10,000. Oh, and here's why. Well, instead, we got a 165% gain. So no, this is not immune to the media madness we talk about here so often. No doubt Bitcoin is extremely volatile and should only be viewed as a speculative asset at this point. In the weeks ahead, we'll revisit this topic to explore more about what the asset actually is. But for today, we'll leave you with Bitcoin price returns over the past 10 years. Have a great week.